So I've been so tempted to just sell off all of my holdings and just wait for the actual dip. But in this video, I'm going to show you why I chose not to do this. So as you can see, as always, I'm going to explain this in real terms with my trading 212 portfolio. The current balance is £106,654. It is nice to see a value of over £100,000. Now, the story starts about 6 to 7 weeks ago. I had around £116,000 in cash, and then I decided to put it all into the S&P 500. Now, before that, I was actually having a lot of fun with the volatility. As you can see, on the 15th of January, I had £107,748, so really not that far away from what it is now. And then I was actually just swing trading, having so much fun with the volatility, and I actually made quite a bit. I was really happy with myself. And then I thought, why not put it all back into the S&P 500? What could go wrong? If I go into my orders, you can see I have a total realized profit of £14,000, £1,600 worth of dividends, so nearly an entire year's worth of ISA deposits for free from doing this. Now, of course, as the famous saying goes, I probably am just making it up right now, but if you want to time the market, you're probably going to get burnt. And then on the 24th of February, I put everything in again, thinking, you know what, it's just going to rise again. I can take a bit of profit again and make even more money. But that did not happen, as you can see. And currently, I am down on that investment by 8.9%, or £10,074. Now, over here on my Trading 212 Invest account, this is the account that I use outside of my ISA because, you know, everyone does get a capital gains allowance, and I want to make sure that I am maxing out my capital gains allowance. And then that will help me to max out my ISA that I have done every year for the past 4 years. Now, as you can see, you know, I have actually bought quite a bit into the S&P 500 after the dip had started with my Trading 212 ISA. But even then, even though I bought it at a lower price, you can see I'm down by 7.51%, or a loss of £1,617. Now, I'm not going to lie to you, I have been very tempted into just selling out everything here at least, and then just waiting for another dip. But I'm going to talk about that and why I decided not to. Now, if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, all you have to do is to click the link in the description box down below. Alternatively, if you've already signed up to Trading 212 in the past 10 days but have not received your free fractional share, all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code. And in this menu, just enter my code JUBAIR and you should receive a free fractional share. Look, I know the saying is time in the market beats timing the market, and that's pretty much going to be the case for 90+% of investors. In fact, most investors actually lose to the market because they're always going in and out of the market. You know, it's almost impossible to try to time it each time. People basically are buying at highs and selling at lows. Now, although I confess to you guys that I was making thousands of pounds from doing that, and I'm pretty much broken even if you consider those losses, not everyone can keep timing the market. And you know what? It's impossible to do this because no one knows what would have happened to the market. No one knows about the tariffs. No one knew what the president of the United States of America was going to say on this day and that. It's just impossible to try to do that. Now, despite me saying that, you know, at the end of the day, this is my portfolio. Your money is your money, and you can do whatever you want with it if you are convinced that you can try to time the market with it. You know, it's not illegal at the end of the day, and if that's something you want to do to try to, you know, reach retirement quicker, and that is something you're going to do regardless of what I say. Now, the reason why it's tempting to actually be selling out my portfolio, although I'm not going to be doing that, is because we keep seeing these massive dips, and as humans who have evolved to try to, you know, use pattern recognition for survival, it seems like there's going to be another big dip. So why not just sell out now, especially because we've seen a nice little rally over the past 5 days, as you can see, up by 2.68%. It just seems logical that, you know, during this time of pessimism with all the tariff talks going on, the Federal Reserve in the United States of America being threatened by the president, that, you know, there is going to be some optimism now. Maybe it's just institutions, you know, buying back. Maybe it's this and that. There's always going to be another reason for why something is happening. But it just seems like with our pattern recognition minds, surely there's going to be another dip. So why not just sell everything out, protect ourselves, and just wait for the dip? Well, in fact, if you are convinced that you can time the dip, then you know what? I'm not going to stop you. Do that. However, I'm going to show you what it looks like on my end. So you can see this right now. This is my Trading 212 Invest account. As you can see, if I'm going to sell now, I will be making a loss. This is an actual realized loss of £1,617. Of course, if there is a dip coming, I've just saved myself, from collateral damage or further damage because I've realized this loss, but I am convinced there will be an even larger drop, which means essentially I'm going to be making more money in the long term because I'm going to be buying at the lower price. And those losses that I would have got, when the market, supposedly is going to drop, I will be avoiding those. Now, for me particularly, it seems very tempting because this is £19,926, which is almost exactly the maximum that you can deposit within your stocks and shares ISA. As I've said before, I haven't maxed out my stocks and shares ISA, although I have deposited over £1,000 into separate ISAs. At least £19,000 could go into my stocks and shares ISA. Just take the loss on the chin, £1,600, and don't worry about it because there'll be another dip, so I will be, reducing my losses there. Now, the reason why it's very silly is because over the past few days, we can see there has been, pretty much an increase day on day. And from the 7th to the 25th, this is a massive increase of 10%. You don't even see that much over a whole year typically. And just to see that in less than a month is absolute madness. Now, the danger of selling out is that if the stock prices keep going up, then essentially you have lost money and you will not be able to find a new entrance point to buy that. Now, if it keeps going up, you're going to tell yourself that, don't worry, it's going to come back down. Don't worry, it's going to come back down. And then when it doesn't come back down, you're going to essentially be buying at such high, ridiculous prices that it would have made absolutely no sense for you to sell out in the first place. Now, I understand the urge to sell, and by all means, I am not a financial advisor. I don't even know you. So if you want to do that, then do it. I can only show you my own journey, and in my own journey, as tempting as it is, I'm not going to do it. It could be a mistake, but you know what? I don't have hindsight right now. No one actually has hindsight in the present tense. So all I can really do is to just wait it out. A 10% increase in 2 to 3 weeks is absolutely amazing. Perhaps one thing that I could do is when the prices go back up and I'm breaking even or a small profit, I could sell it. But then again, it is silly to do that because what if the prices go up? I miss my opportunity. All the weeks that I've held in red, basically die in vain. I could have at least put the money into qualifying money market fund. You do have to weigh out your options, and at the end of the day, you can do what you want. There are some silver linings that the S&P 500 may be, okay after all of these tariff troubles. One is that Google is posting really, really good results. As you may know, that is one of the magnificent 7 of the S&P 500. And if that goes up, a huge part of the index actually goes up too. Also, investors are gaining confidence that, the tariff talks might be wrapped up soon. And of course, that the head of the Federal Reserve may not get fired after all. So make sure to check out some of my other videos, and I'll see you in the next video.